Okay, let's jump right in. Welcome to the Explainer, everyone. If you're a focused learner looking to systematically upgrade your financial knowledge without all that unnecessary noise, you are absolutely in the right place. Today, we're unpacking a really fascinating blueprint straight from our source material on beginner investments. We're going to look at a highly structured, step by step project. But, we aren't building a house or a skyscraper here. We're looking at a wealth construction project. And honestly, the most exciting part, the primary building material we're using today is just a single, crisp $100 bill. Now, I know exactly what some of you might be thinking right now. It's an immediate gut level skepticism that stops almost everyone dead in their tracks. Like, can a mere $100 actually matter? Can it really be the foundation of a massive $1 million system? We've all been conditioned to believe that wealth creation is this exclusive club that requires thousands or even millions of dollars just to get past the velvet rope. But our source material challenges this paralyzing assumption completely head on. Because as we're about to see, the amount of cash you start with is vastly less important than the architectural integrity of the system you plug it into.
So here is our blueprint for today. We're kicking things off with Section 1, the $100 myth. Then Section 2, fixing your financial mindset. Section 3 is the $100 allocation blueprint. Section 4 covers compounding and scaling growth. And we'll wrap it up with Section 5, building the wealth system. Let's get to it.
Section 1, the $100 myth. There is this incredibly profound truth we just have to accept right out of the gate. Most people think $100 is too small to matter. That's exactly why they never get rich. I absolutely love explaining this concept because it totally flips conventional wisdom on its head. Wealth isn't built by starting big. That's a total illusion. Wealth is built by starting smart. If you're sitting around waiting until you have 5 or 10 grand sitting in a savings account to finally take your finances seriously, well, you're trapped in financial paralysis. Failing to realize the power of a single $100 bill is precisely what keeps the vast majority of people on the sidelines forever. Think of it like this. The size of the seed doesn't dictate the size of the tree. It's the quality of the soil and the consistency of the watering that actually matter. Moving right along to Section 2, fixing your financial mindset. Before we even think about planting that seed, before we allocate a single dollar of our 100, we have to clear out the mental weeds. Seriously, all the tactical advice in the world is completely useless if your own psychology is working against you. It really boils down to two drastically different approaches. On one side, wealthy individuals think long-term. They are perfectly comfortable making a move today that might not actually pay off for 5, 10, or even 20 years. But on the other side, poor individuals consistently chase quick wins. They want the lottery ticket. They want that magical stock that's going to double overnight. And the thing is, chasing that quick win almost always leads to starting completely over from zero, whereas long-term thinking builds an unbreakable chain of progressive success. And that leads us to this absolute bedrock principle. Your mindset determines your strategy. This is the crucial foundation that dictates literally every single financial move you will make from here on out. If your mindset is broken, your strategy is going to be broken too. If you're operating from a place of impatience, you'll naturally gravitate toward high-risk, low-probability gambles. But if you adopt the mindset of an architect, someone who knows that a strong structure requires really careful, patient bricklaying, your strategy naturally aligns with the mathematical realities of building wealth. You absolutely have to fix the blueprint in your head before you can build the empire in your bank account. Section 3, the $100 allocation blueprint. All right, here is the actual core formula to optimally deploy your first $100. We are slicing this up into 4 highly intentional categories. $40, the biggest chunk, goes to index funds. $30 goes straight into skill building. $20 is allocated for side hustles, and finally, a small $10 slice is reserved for high-risk investments. Notice what's happening here. This isn't about throwing everything you have at a single magic solution. It's a beautifully balanced, diversified approach that perfectly hedges stability against growth and passive investment against active income generation. So, let's break those targets down. That $40 for index funds, that goes to an S&P 500 ETF. Essentially, it's a single fund that lets you own a tiny little piece of the 500 largest U.S. companies. This is your anchor. You're basically betting on the long-term historical growth of the American economy. Now, the $30 for skill building is absolutely vital.
The source specifically highlights things like AI, freelancing, or sales. Why? Because investing in your own ability to generate capital often yield the absolute highest returns. Then we have $20 for side hustle experimentation, which lets you try out small entrepreneurial ventures without risking your livelihood. And that final $10 for high-risk learning, like crypto or startups, it gives you exposure to massive potential upside, but it strictly caps your downside to just 10% of your capital. It is a brilliant, mathematically sound system.
Section 4. Compounding and Scaling Growth. Okay, so we've got our bricks laid, now we need the mortar to hold it all together and make it actually grow. And the secret here is one of the most powerful laws of the financial universe. Consistency beats intensity. You see, so many people burn out because they try to go all in right from day one. They try to be intensely focused for a month, they get totally exhausted, and they quit. But this blueprint requires a completely different approach. The key instruction here is to reinvest your profits monthly. You take whatever tiny dividends your ETF pays out, whatever small profits your side hustle generates, and you just push them right back into the machine. It is that steady, unglamorous, relentless monthly execution that actually builds fortunes. And that brings us to this specific metric, 10 to 15%. The source material tells us we need to aim for a 10 to 15% annual return. Now, why is that specific target so incredibly important? Because it's the absolute sweet spot of compound interest. It's realistic enough that you don't have to take reckless, foolish risks to hit it, but it is high enough that over a long timeline, compounding does all the seriously heavy lifting for you. It's not about doubling your money every single year. It's about a 10 to 15% steady climb that eventually creates this massive exponential upward curve. Which leads right into our next big directive: increase your income first, then invest more. Pay close attention to the order of operations here. This is step 4 of the blueprint. As your skills in AI or sales or your side hustle actually start paying off, your active income goes up. The fatal mistake that almost everyone makes is immediately inflating their lifestyle with that new cash. But this explainer gives us the alternative. You scale your income specifically so you can scale your investments. Wealth builds exponentially faster when the overall shovel you're using to feed the investment machine just gets bigger. Section 5. Building the wealth system. Look at how these 4 interlocking steps form this cohesive, unstoppable progression. Step 1, mindset. We established a long-term, patient approach. Step 2, allocation. We intelligently divided our $100 into funds, skills, hustles, and high-risk learning. Step 3, compound. We committed to consistent monthly reinvestment aiming for a 10 to 15% return. And step 4, scale. We use our newly acquired skills to increase our active income and feed it right back into the first 3 steps. Each piece completely relies on the others. If you skip a step, the whole machine breaks down. But if you align them in this exact order, you've got a self-sustaining engine. And honestly, this brings us to an absolute mic drop moment from our source text. Your first $100 isn't about profit. It's about building the system that creates wealth. I really want you to absorb the gravity of that statement. The first $100 you put to work isn't going to buy you a sports car or a mansion on a beach. Honestly, it was never meant to. That initial $100 is just the prototype. It's your proof of concept. You are literally buying the machinery, organizing the factory floor, and turning on the power. The system is what makes you wealthy. The initial cash is just the key that turns the ignition. So as we wrap up this explainer today, I want to leave you with one final provocative question. What will you build with your next $100? Is it going to disappear into a weekend dinner, a new pair of shoes, or just some quick distraction? Or are you going to take that bill, apply this exact blueprint, and start constructing an unbreakable system that works for you 24 hours a day? The blueprint is right in your hands. The materials are ready to go. Now it's time to start building. Thank you so much for joining me, and as always, keep learning.